Alright, hope everyone's doing well. I wanted to answer your question in this is easy for me because it's just a video. It's easier, it's faster for me to do this, and you can learn more. First. Okay, so he's asking, you're asking about right here. You can call it a low 2. I'd call it is a low 2. And you're asking if you sell this low 2 right here, and this is the Aussie dollar weekly forex, where do you put your stop and how do you manage it? Well, the problem I have is I would not take that trade, and the reason why is you're getting a low 2 late in the trend. So you've had 2 legs down, possible measuring gap, maybe something like this. You know, so there is still room down. However, usually low 2s late in a trend or final flag. So bear trend, low 1, low 2, and it reversed. Now it was the second leg. So this is a tight channel. So on the monthly, realistically, it probably will go down further, but the problem is, you can argue there's a gap. So I think if you take it, it's better to I would treat it almost as a swing, and the reason is I know it's always in short, but it concerns me. There's buying pressure. Now this could be a final flag and get more down, so you know I think you're better off just holding. If I would, okay, so let me give you the answer then. If I sold on a stop below this bar, or just realistically it's a weekly chart, you couldn't do that. So if I sold the open of this week, the smallest stop I could use is above this bar. And I know that's a big stop, but that's the reality. You've heard Al say many times that's where the stop goes. So you can put your stop above here. Some traders will put their stop above here. Now this is a weekly chart, so it's huge, I understand. But I mean, that's just the nature of the game. So if I was taking this trade, I would put my stop one tick above this bar, sell at market, and I would just swing the trade until I figure out my actual risk. So if I'm lucky, my actual risk might just be from my entry to the high of this bar if it keeps going down. In that case, I would just try and get 1 times my initial risk. So I would just try and get 1 times this, maybe, I might look at the monthly and say, well, we've got that, maybe we'll get maybe something like that, maybe hold down to here, So I would probably hold. I would treat it as a swing just because where your stop is. Now I will say, so I would go for 2 times my risk, and I'd probably convert it to actual risk, depending on, well, I say that if this bar went sideways and the next bar just shot down, I would probably go for 1 times initial, because it would still be more than 2 times my actual, because the actual risk would be above here. 1 on a stop, 1 tick above this bar or this bar. However, so I would go for 2 times. I would plan on going 2 times your risk right now. However, you know, if you did use a wide stop, and I know this is crazy because it's a weekly chart, but I think it's the reality. You put your stop one tick above here, short below here, you can go for 1 times your initial risk. However, or 1 times your actual risk once it's discovered. There are plenty of traders who will sell this open, stop above here, and once it goes their way, they'll look back on the trade and say they only needed, you know, let's just say this bar closed as it was and the next bar shot down. They would say, I only had to have a stop 1 tick above here. So they would just simply, since the risk is really small, they might just go for, they're not going to go for a really small actual reward if their actual risk is small, so they might go for just a measured move of this body or something. But it's not as easy as, you know, shorting down here, shorting here, because we've had consecutive climaxes. So you have 1, 2, 3, 1, 2, maybe leg 1, pull back leg 2, you know. Because I really see this as first leg, this is a pullback, so you have an ABC pattern, so sideways, possible final flag, you know. But, you know, it's large, so it's tricky. I would, you know, it's not, you're getting a low 2 late in a bear trend. However, I'm not saying, you know, I think all I'm saying with that is you need to stop probably above here. Because price could easily just, I don't know if it's gone above. It has not. Price could easily just go, you know, up to here and then turn down. So the reality is, it doesn't matter what time frame you're on. If you're going to trade a weekly chart, you have to trade small enough to allow for the correct stop. So I'd put your stop up here and hold. I know it's a big, you know, the problem with that, the probability is less because the bar is big, you know. Small body, large tail. So, you know, the reason I say it's for a swing is I think there could be buyers below, because now when I say buyers below, I mean we could get a final flag and more down. So there is, you could probably make 2 times actual risk, and I don't want to say too much about it, but I want to give my thoughts. You know, in a hypothetically, this bar's big. It's forcing traders to sell the middle of this trading range. The middle of the trading range is left roughly 50%. So we could easily, bears want a double top at a measured move down. So okay, let me start over here. That just made me realize it. So if I was taking this trade, I would go for this double. I would go for a measured move. So I would have a target down here. Reason being is because you have a double top. I would bet on the breakout below because it's a swing trade. However, it's lower probability because it's forcing traders to sell in the middle, which is roughly 50%. Bulls are trying to get a double bottom, so bulls want this exact opposite. They want that. So probability is not great for a scalp. So actually I want to kind of reevaluate this. I wouldn't put a stop up here. I'd probably put my stop up here, and if it goes up, stops me out, and turns back down, I might look to short again. But you know, here's the thing you need to notice is this. you know, this kind of gives you a hint. Notice this high and this high. Price went a couple pips above, and I say a couple, I know it's a weekly chart, so it's probably a lot, but not for a weekly, and turned down. Went down a little bit, but not great follow through. Bulls bought below this bar, scalped out. Bulls bought below here, scaled in lower, scalped out. It's a triangle, so final flag, but bulls are making money. You know, if it's a strong trend at this moment, and this is the weekly, I know there's gaps, so you want to really look at this. Price might do something like that and go somewhere down here, you know. So I don't want to get into too much detail on that, but I will say it's a tight channel. There are gaps, so we may get a little more down. However, this is a sign telling you traders are starting to sell on limit orders and they're scalping. So, you know, right here, they sold the close, scalped out. You know, maybe they did something like 2 times their risk, and that's close to 2 times. You can see if you sold this close, your actual risk was to put your stop up here. Your actual risk was that 2 times was about down here. So they're not holding. So hope this helps. Let me know if that. I hope that answers majority of your question. Let me know if it doesn't, or if you have another question.